name is Marcy Berger, and I'm the Member Services Coordinator here at AFSA. Welcome to Navigating the Road to Recovery, Proven Delinquency Risk Management Tools, presented by Jeff Anderson, Vice President of Claims Products at SWBC. This presentation is a part of AFSA's Business Partner Webinar Series, which allows industry experts to share timely educational topics directly with AFSA members. The webinars are designed to provide information that will allow AFSA members to more effectively design, develop, and implement strategies for their company's success. A few housekeeping notes. To ask a question, use the question box on the side of your screen. I'll read them aloud to all following the presentation. The slides and recording of today's webinar will be available later today on AFSA's website in the Webinar Resource Center. Finally, you'll receive a survey after the webinar is over. Please take a moment to complete it. Your responses help us fine-tune the program so we can target the issues that are important to you. And now let's get to our presenter. Jeff Anderson recently joined SWBC as Vice President of Claims Products. As a skilled executive with over 30 years of experience in auto claims and over 10 years in auto finance, Jeff specializes in finance risk mitigation, total loss claim handling, loan ancillary product cancellations, and repossession claims and decreased loan deficiencies. Jeff utilizes his experience to provide auto lenders of all sizes with insurance tracking, repossession claims, total loss claims, product cancellations, and guaranteed asset protection claims. Jeff graduated from St. John's University with a Bachelor of Science in International Business, and he holds his property and casualty insurance license. Jeff is also a member of AFSA, National Automotive Finance Association, and Consumer Bankers Association. SWBC is a privately owned company headquartered in San Antonio, Texas. They are licensed to market and service a variety of financial products in all 50 states, and they have been servicing financial institutes for over 40 years. And now I'll turn it over to you, Jeff.
Thanks, Marcy. I appreciate that nice warm welcome, and I want to thank everybody who's joining us today. A couple quick housekeeping notes on my end. I promise everybody who's spending the next 40 minutes with us, there will be no political ads in this presentation, so you have at least some free time from any of the political ads out there. The real purpose of today, and we'll get into it shortly, is really to talk about some of the things going on in what we know is a volatile and uncertain environment right now in the auto finance space. Talk about some programs that each of the listeners on this program may already been talking about, may have implemented some steps to, and may be thinking about ways that they can do some steps for the risk and recovery needs that meet their organization as we go forward. So again, thanks everyone for being a part of today's presentation.
So Jeff, it's been a roller coaster year to say the least. How have you seen the pandemic impact the auto finance business?
Well, Marcy, that's a great question, and that changes every day as everybody on the call realizes. You know, a couple quick things that we won't dig too deep into, but just as to frame the conversation for today, we talk a lot about what's going on with the coronavirus, COVID-19, and really what's the true impact for everybody on the call. You know, we've looked at what we can do from a business perspective. How do we handle our business now? What have we changed over the last 6 months? And there's some conversation and things that go across the nation from that standpoint. But a lot of what we talk about is going to be individually based on where you may be by state, by facility, and then how you handle those needs of your staff, how they're adjusting the work remotely, if you have staff in the office. What have you done initially? Where are you at now with these things? And then what's your long-term approach as we keep on working through the COVID-19 perspective? One thing I'd like to recommend to everybody on the line, that AFSA has some very good information on the website, and then actually some of their committees talking about the coronavirus, work from home, and there's a lot of work being done as organizations share ideas and thoughts of what works best for them in each state. So I recommend everyone going out and taking a look at that. And then as everyone here is working through what's going on in the lending and the auto side, I'm not going to dig into auto sales numbers, talk about that, but really, as we talked about COVID, and that's a resounding conversation in the background here, because of early on in the year, we had some manufacturers that shut down some of their vehicle production. We've had obviously a demand from new cars. We've had a demand for used vehicles, and that demand has come about in some ways that we probably didn't think about as we went into this COVID-19. It's really, there are people that are out buying cars for necessity because they want to, from a safety standpoint, from carpooling, they don't feel is what they want to do or not available anymore. They're not comfortable with mass transit in the areas they work. And again, this all changes by state, but I can tell you in some of the facilities that I've been in lately, there's no lack of people coming in looking for new and used cars. And obviously there's a pent up demand right now, and the availability of vehicles is helping to increase some of the prices out there. And then the biggest thing that we're facing as we go through forward with this is risk mitigation. Where are we at with our repossession activity that we're going to be looking at? You know, there's been projections already that right now across the board, the average lender is at about a 50% repossession rate than they were before. Now that number varies greatly by organization, what your internal processes and programs are, but you know, Black Book recently put out some information that they did a survey of lenders and recovery companies that suggested the volume of repossessed vehicles will double in the next 6 months, if not sooner, and that they expect there'll be a substantial challenge for everyone in the process as we talk through this, from recovery, transportation, disposal of the vehicles, increased deficiencies on loans, etc. So as we move through some of the conversation today, we'll talk about, you know, things that hopefully some of you already are thinking about, have made some plans about, but at least we can talk about where you can go forward with some of these things.
Thank you, Jeff. So how have you seen lenders respond to their customers relating to the pandemic?
Kind of tied to the last screen is, you know, everyone initially, when across the board, when there was lockdowns and concern with COVID-19, everybody took a little different approach. From a customer standpoint, people were dealing with being furloughed, either the husband and the spouse, or they've been put on partial time. So they're dealing with that from a home front. You know, recent, and I'll just go with October 14th unemployment statistics. The unemployment rate had dropped to 7.9%, but obviously that's still quite a bit higher than it was at the beginning of the year when it was closer to 3.5% to 4%. And then it indicated at that time, most of the people, half of the group was doing some kind of a temporary layoff. So the hope was that as the economy picked up and lockdowns or restrictions decreased, that they would be back in an employment standpoint. A lot of people have been obviously dealing initially with program, from the stimulus checks to the additional unemployment benefits, and that's been a plus, and that we've seen that been a benefit, particularly in the auto space. And from, as this chart shows, the increase in credit scores, people using those dollars to help pay off bills so that they can get their credit cards paid off and get a higher credit score, which then tied into a better loan and interest rate on their automobile. And then they've also worked with their lenders on current loans, you know, working through, is there a deferral program that they use to help the borrower? Could they suspend payments? Some of the borrowers had to suspend repossessions for a period of time, depending on the state they were in. There's a lot of activity from the customer side. And then there's some other programs that people are working with from a borrower standpoint of, you know, what can we do to help our consumers and customers as we work through this COVID program going forward, and what is the aftermath? Similar to restaurants doing eat in, outside eating, curbside. What can we do from a loan setup perspective, from a payment perspective? How can we make it easier for the customer? And an example of that would be some of the insurance programs that we've seen where, the major carriers during the beginning of the lockdown period were given rebates because people supposedly weren't driving their vehicles at the same rate they were doing before. They were deferring their payments or providing additional discounts during the initial stages. So there's a lot of activity, as everybody knows here, on both the lender side and the customer side of things that we're all trying to juggle. We have all 20 balls up in the air trying to figure out what's the best program for our organization and our customers as we move forward through the end of 2020 into 2021.
What are some ways you have seen lenders balance the customer and risk management?
Well, that's a great question, and I think in the next couple slides we'll really throw out some ideas for people here. In this circle, we've kind of broken it into what we think were probably the three things through the beginning of the year and going to the end of the year that people have really been dealing with. Number one, digital communication. I think everybody on here can say the auto industry, auto finance groups were probably ahead of the curve in ramping up for the needs of COVID from a digital communication standpoint, from ease of access of online qualifying for loans, payments, etc. Now, everyone's not the same place or was at the same place when this started, but that's one thing that everybody has looked for. A lot of organizations have started to figure out programs or trying to build something more of an omni-channel approach of how can I interact with my customers from an email standpoint, a text standpoint, outbound call phase. How can they use the phone system to take information from the customer? Just trying to be more proactive on how they're doing things from an online and purchasing program. A lot of groups are trying to do as much touches with those customers as they can from a digital standpoint. A lot of them, there used to be the welcome call, now it's turned into the welcome video, following up with the borrower on their loan and getting any additional information they need from an insurance standpoint or verification standpoint. So digital communication has been huge. The other flip side of that, though, is, again, depending on what's going on in each state and the restrictions, there still are people out there that want to do it the old way, that don't want to do everything online or on their phone or through, text, email, etc., that they want to be able to walk into a brick and mortar location. So the challenge as we talk about this going forward is really going to be, how do I create and weigh the building of a program that can work for both sides of the customer experience as we move forward? And then the second piece of this is for really 2020 and beyond is regulatory landscape. The big thing that we've talked about in other AFSA meetings and calls has been this whole idea of product cancellations. And product cancellations when it's and getting the refund back out to people in a timely manner. States continue to expand guidance on how they want that process to be managed, and we'll talk a little bit about that later, but that's something that's out there. We're also seeing, as the COVID and restrictions have come out, more activity in the whole recovery process, in the repossession side. How am I going to recover that vehicle? What are guidelines that I can use to do that process? How do I handle the vehicle once I got it? What are the restrictions or concerns that I need to deal with going forward? And that's a big piece that's out there on the regulatory landscape, as well as how are we going to make sure that with all these deferrals of payments and delays in payments, how does that impact someone's credit score? if it does impact their credit score, which the idea is that in most cases that it doesn't, but if these things continue, are we just putting off a process that needs to happen later? As we talked about, the potential of repossessions increasing twofold before the end of the year. And then the last one is really more of a what's being done creatively at the lender from a vehicle return and credit preservation program. We talked about deferrals and putting that piece together, but really for those of you that have been around for a while, you remember back in the last economic tough time we had back in 2008, 2009, Hyundai came out with that program where if I either lose my job or have financial constraints, I can return the vehicle. Well, some of those programs are starting to come up again and have started in the last couple months with, COVID, where, if there's an issue because of being furloughed or a lack of, or losing my job, can I return that vehicle and how does that impact my credit? And then again, we talked earlier about insurance companies doing discounts and delays. What if I defer my insurance premium, and how does that impact me going forward from having potential coverage on my vehicle? So in a nutshell, 3 big areas. And I think the goal as we go talk a little bit further into this is to talk about some things that we can do to address each of these things.
Thanks, Jeff. Over the years, you have seen significant changes in the handling of recovery and risk product and services. What are some of the most impactful changes?
Thanks, Marcy. When you say over the years, that just makes me feel old. So we'll kind of put it into a nutshell. But this slide tried to convey some of the big things from a risk management standpoint that as I get out and talk to clients and prospects, and then experience over the last years of things that each group is trying to do and what we can do in our new world and way of and handling things. Collection programs are obviously, they've always been there, but how are we changing what we're doing from a collection standpoint? We talked earlier about the omni-channel communication. What are all the different ways that we can reach our clients and work with them to get those payments in, and having a multi-stage collection process? So in the beginning stages, is it simply a text or email reminder that a payment is due or a payment is late by a certain number of days, and then follow it up with different stages of communication from email to phone call, and being able to then take on the flip side of that, if I want to, as a customer, want to text back the status of my payment or call back, making it easy for that collection program to work. And then how are we working with our customers from a charge-off and recovery services program? So if it does get to a stand point where we have to do a repossession, what are we doing to help decrease that deficiency and decrease what the end amount owed is or potential is out there for the customer to try to recover from them, as well as dealing with recovery services from what is the new world in how we're dealing with the services that we're working with on those people that are going out to recover the vehicles, the aftermarket of the vehicle at the auction facility, and then some of the online downstream things. How are the auctions now utilizing some of those online programs that they had set up previously that now have become even more important as we continue to move forward with the repossession side and trying to build that out as those volumes continue to look like they're going to increase as we go through the end of the year. Insurance monitoring is another tool that a lot of organizations have used in one form or another. I'm old enough to remember some of the smaller organizations having, I guess we'll say, a shoe box, but a box full of the insurance slips when they come in and matching it up to the loan to make sure that there was some form of insurance on that vehicle to protect my collateral from a risk mitigation standpoint. Now, obviously, that has changed substantially from the shoebox mentality to the full-blown insurance monitoring program where you were tracking insurance and following up with letters and making phone calls and contacting insurance agents. That's all still out there, but really it's more of how can we have minimal contact with the borrower but to still ensure that the collateral is covered and we can mitigate our risk from that standpoint if a loss does occur. Because as we talked about earlier, as people are buying more vehicles and the demand is out there, they're starting to drive more. In a lot of states, they may be locked down of what they can do, but they at least have the ability to take their car out and drive around, and miles are increasing, and the severity and number of accidents is increasing. So there's a risk out there to make sure that there's some type of insurance on there so that we're protecting the loan itself. And then how does that tie into some of the supporting services that we talked about? How does keeping in track of insurance tie into our collection program? Is it that once we see that somebody may have dropped their insurance, does that lead to a greater propensity that they're going to start missing payments, and then we get into the repossession stage and the collection program needs to begin? And how do you share that data between different groups within your organization? And then obviously repossession claims. If the vehicle is eventually repossessed, there's damages on it. Having a repossession claims program will help you decrease that loan deficiency, collect any dollars that may be out there that you can recover on a primary policy that may be in place from when your vehicle had insurance on it. And then hopefully you can, through that, help decrease the volume and the impact of those repossessions, because you're collecting those dollars and offsetting some of that deficiency that's out there and helping the program in a nutshell. So, the top three really are all tied together. That insurance monitoring can give you some projections of how it may impact your collection program. If you do need to get into a collection program and then eventually repossess a vehicle, the insurance piece can help you tie into recovery on any deficiencies from a damage standpoint on those repossession vehicles, and then offset some of that money that may be lost on that repossession. So, everything that you do, if you have a program internally or you use some pieces offset with a vendor, they all tie together. So you need to make sure that you're having a good coherent program, that somebody, not one group in one section of the company is doing this piece, another group is doing the insurance piece, and another may be doing your remarketing or repossessions. They have to be cohesive between the groups. And then the other piece, we talked about what can we do from mitigating some of those losses, and some of that can be from a total loss claim standpoint. Total loss claims can help you obviously from a customer experience standpoint, because if your vehicle or your borrower gets their vehicle in a loss, they're going to need to get into another loan potentially. So you can set the service by you're helping them out, helping them get into another car. You'll know what the cost of that total loss is going to be to help pay off their loan. And if there is a offset between what your loan amount is and the total loss amount, if they have gap insurance, you can help them out filing the gap claim and ensuring that the gap claim is handled properly, and get an idea of what that gap claim will be. So you have a total package of, you owe $10,000, $6,000 is going to be handled off your total loss, and $4,000 is going to be handled off of your gap claim. And it gives them a good round perspective. And that's, a total loss claim is a big piece of your customer experience. And tied into that, by doing some of these total loss claim review sessions where you do an audit of what the settlement value is from the primary carrier, that can help offset any differences between what your total loss amount is and what your loan amount is. So you can increase that total loss settlement by reviewing it and making sure all the options and the quality of the vehicle and mileage and everything is taken into account. And that will help the total loss piece and help pay off those vehicles to get that loan paid off. And on the same side, that same audit process can help benefit that gap claim to make sure that the gap policy is covering everything it can to help offset any potential deficiencies on that loan. And then the big one that's, over the last couple of years since 2017, the whole product cancellation piece. There's the regulatory compliance for those product cancellations when the loan is paid off early, or they refinance the vehicle and the loan is paid off. It's a bankruptcy. There's a lot of different situations where, in 30 some states, the lender becomes the person who's responsible for getting that refund back to the borrower in a timely fashion. There are other times, if it's a total loss, there's product cancellations that can be done from a warranty standpoint that can help go back to help pay off the loan and help the situation where it just offsets any deficiencies that might be there. And then you have to make sure that you're doing it in a timely and respectable fashion. You're dealing with not only the consumer, you're dealing with the dealership, and you're dealing with the carrier. And you need a process that encompasses all three of those areas. And I think right now, some of you have been paying attention, there's some litigation going on in Colorado on some of these situations. And it's just something that you need to have a solid program to be able to monitor the whole process as you go forward. But in a nutshell, all of these are things that I'm sure over the last couple of months, if not before, you've been thinking about, talking about. You may have some pieces of it internally, but you really need to look at, as we go forward, 2020 and beyond, how can I encompass this into these areas into a program where I can monitor and make sure they're working efficiently to help not only the organization, but our customers.
Thank you, Jeff. What other hot topics are you seeing?
Well, I think one of the things that we talked about is, as we've gone through 2020, is integration, as I said, of all those programs. How can you integrate your collections, your insurance, and your claims activities together? Is there the possibility to have a single vendor that can help you do those, or at least are you looking internally at what the process are? Are you looking at your compliance situation? Because each of these could have different compliance issues, from the cancellation piece to the gap claim piece. And if you can integrate them together, you can have fewer compliance issues because you're working hand in hand with the programs, less oversight if you're using an off-site vendor to handle some of the programs. And then if you have an off-site vendor or your own program, you need to have a portal for your customers so they can go out and see not only what's going on with their claims, but you need to be able to see what's going on from a dashboard standpoint of what's the activity, what's the status, where are we at with these situations. Like in a product cancellation on a total loss, you may have 3 or 4 products that you need to be tracking and want to know what the status is. If you have a consumer who's had a total loss that you're helping them with the claim, what's the status of that? Where's the gap claim? What am I looking at for a recovery? And then again, these all tie into the omni-channel approach, not only for just collections, but even on the claim side. How can I interact more with my customer from an email, text, IVR, live phone call with each of these people in order for them to handle the claim and process the claim more efficiently and be available 24/7 for the customer to help wrap up where we're at with all these different programs from a recovery standpoint.
As the pandemic is now in its 9th month, what are your thoughts going forward?
9 months, wow, that feels like 3-4 years for me. I know we've talked a little bit about everybody working remotely, and some people now starting to make plans to get back to working at home and or back in the office, and some staggered things that are going on. But as we talk here today, I think you might have picked this date for me to talk about because of the oddity of it. We have Halloween coming up in 2 days, which is going to be a unique experience this year. And then we have the election coming up next Tuesday, and that has been in full process from that going forward. So really the outside force is that big thing everybody knows, political landscape, what's going to happen from an election standpoint, not only at a national level, but obviously at a state and local level, depending on where you're at with your business, your staff, your customers, because each period of time. COVID, we can talk about what is the impact there. We started to talk about some organizations have people coming back in the office. Some are looking at staggering out into 2021. Where does that go? But one of the positive things, and we talked about a lot of this, is with COVID-19 has been people have really become flexible, creative, and looking at their resources and their customers and how can they interact with them better from a real-time perspective, and how are we connecting from a organization standpoint to our customers in a better way. And I think a lot of things have come out that have, we talked about the auto finance area starting to do a lot of these things, and we had probably a leg up, but it's really helped people look at what works and what doesn't work from a customer contact, customer communication, overall customer experience standpoint. And then payment options, as odd as that seems, what did the from I guess a negative into a positive, what did some of these deferral and extended period of time as far as making your payment, how did that impact our group? How has and how will any additional stimulus programs impact our consumers from being able to help catch up on those payments and help catch up with their overall credit scores, and use that money going in the near future if there's additional stimulus payments to help purchase more vehicles as the volume and availability becomes out there for everyone as we move forward.
Thank you, Jeff. Can you provide an overview of ways to improve risk management for our audience?
Well, I think we talked a lot about the different programs that we've had and what is out there and what's available, but really, the contact and communication with our customers has been a key and continues to be a key to let them know where they're at in their payment history, in their loan status. Insurance monitoring going forward, I think, is going to be a key for a lot of people, especially coming off of, as we talked about, the different payment plans, the insurance deferrals, the insurance discounts, some of the things that the carriers have been doing, what's been going on with the status of those policies. We may have thought that somebody had some insurance when they first took out the loan, and now a month later, that has changed substantially because of their own economic situation. We've talked a lot about collections and how we can better serve our customers, and that's an ongoing thing that we're going to do from a communication and ease of helping them get back up to speed in their loan. Some of the things to offset as we get ramped up, and potentially the repossession claims piece as those volumes increase, and getting our whole program set up from a recovery standpoint to after marketing standpoint, and then that repossession claims piece. Another one that's going to continue to be out there is the whole product cancellation thing. That's not going to go away. Total loss claims, total loss review, different ways that we can enhance the customer experience beyond just getting them a solid loan at a good rate. How do we keep them in our family so that if something happens to that vehicle or they buy another vehicle, they want to come back and get that loan back through us. So those are all things that are going to continue to go as we move forward. And again, everyone's got 100 things going on at one time with the economy, with COVID-19, and addressing all the issues that are out there. But where is everybody on taking time from an internal review of what's going on in their organization? What can we do to make it better? And how do we sync all the different programs up that we have so that as we come out of this 2020 and go forward, that we're set in a good position to move forward. And then another, a lot of things that have continued to go in the background. What do we want to outsource? What do we want to use our internal resources for? A lot of people having people working remotely. They've seen that their skill set of their employees can really help either push out different pieces of their product, and they're probably not as good at doing some other things. So how do we utilize those people and make things available? And then again, the biggest thing, and I've repeated it several times, how do we get as much data and information back to the customer on where they are, what we can do for them, and the services that we can provide them, so that they want to continue to utilize our resources going forward with additional loans on their current and additional vehicles as we move through this. So I think that's probably in a nutshell. Again, Marcia, and I appreciate you giving me the time to share my thoughts, but a lot of what's going on is what can we do as a auto finance business organization, utilize our resources from AFSA, utilize our internal resources as a company, utilize those vendors and outsource programs that can best help us grow as we move forward, and really keep our eye on what's going on, obviously, not only economically, but with our customers.
Thank you so much, Jeff. We received a few questions, and just a reminder, to ask a question, you can use the question box on the side of your screen. The first one is, what does the legal landscape look like going forward with regard to product cancellation?
That's a great question. For those of you on the line who've been around for a while, back in 2017, the whole product cancellation, product refund on an early loan payoff really took off and became an issue as across the nation. I think we started at about 17 states, and then it's now 30 plus states have specific legislation stating that the finance company is responsible for handling the refund of the GAP and typically GAP life, health, and credit products, and getting that refund back out to the customer in a timely manner. And then in a lot of states, if that's not done in a timely manner, there are fines that can be parlayed by the state. That will continue to go forward. I anticipate, obviously some of it will be dependent on what happens with the political landscape, but I anticipate, we have 46 states now that have a regulation within there that says who is responsible for the refund, depending on if it's just a flat out early loan payoff and then the lender's responsible, or if the borrower needs to contact the lender or the carrier. So that's going to continue to get solidified. But as I say, over the course of the last 2 years, it's grown from 17 states to almost 40 states, and then it will continue to grow of who's got specific legislation that the lender is going to be responsible for the refund.
Thank you, Jeff. Another question is, how can SWBC help credit unions overcome product cancellation challenges?
Well, SWBC has the ability to work with credit unions as well as any lender to set up a product cancellation program, to work with you on offsetting the need to have your own internal group monitoring those programs. So we take, in the case of the early loan payoffs or refinance or bankruptcies, we can take that information, handle the refund process with both the carrier and the dealer to ensure that those dollars are getting returned and credited back to the borrower in a timely fashion. Our program works not only with the carriers to verify and assure that the product was still in place and wasn't already used from a gap standpoint, to verify what the refund amount is, and then notifying her that those refunds are gotten back out to the borrower in a timely fashion. So like I said before, it's kind of a triangle. We are in the middle of it, working with the dealer and the carrier to make sure the dollars get back and the appropriate refund gets back to the consumer who took that product out to begin with.
Thank you, Jeff. Another question is, how do you see deep subprime being effective? Will it continue to be more steep declines?
Well, that's interesting. As we get out of this COVID, and I think the deep subprime, and this is just Jeff's opinion, is going to have a new bracket at some point because of specifically if the additional stimulus dollars are presented. Overall, I think we're seeing from, if people take a look at some of the Experian report information that comes out, credit scores are going up. Although the deep subprime group was with one of the main groups that had a decrease in new loan activity, they need vehicles just like anybody else. So, a long story short is that they're going to rebound as we get back and the economy continues to grow. Not to sidetrack it, but today, obviously, the GDP came out, and I don't want to get political, but obviously it's grown substantially since last quarter. And hopefully it will continue to grow to get our organizations back up and those people in the subprime group going again. But even at that, if I'm in a subprime group, I still have the same risk and maybe even a greater chance of needing to have some type of an insurance monitoring, some type of a repossession or total loss piece, so that I can recover the optimum amount of dollars I can to offset any loss on that loan. So I hope that kind of answered the question the person was asking.
Thank you. Another question is, how can lenders prepare for a potential increase in delinquencies and repossessions that could accompany the aftermath of the pandemic?
Well, I think we kind of talked about, and I hope most of the organizations on this session or are listening in have already started this process, but really, you have to look at where are you at internally with your current recovery program, from recovering the vehicle, how you're handling that, the people that you use. There's a lot of at the beginning of the year and going forward, there's a lot of conversations on recovery and making sure that those people handling that are licensed or at least following the correct policies and procedures. There's some changes that have been coming out on that, and I assume will continue to impact that piece. But then how does that tie into your remarketing program, and who's handling that in your organization, and how does the ability to handle or collect on some of those lost dollars that are out there, if you're not doing a repossession claims program, if you're not viewing those repossessed vehicles for potential damage and filing claims with primary carriers, there's a substantial amount of money that's sitting out there that you need to do. And a lot in the past for some of the smaller organizations, or even the larger ones, the fear was, I don't want to do any type of an insurance tracking program. Well, that's old. It's now, I guess the verbiage is called insurance monitoring, but really it's just keeping an eye on any changes that are happening on the insurance policy for that piece of collateral, and then knowing what your risk is. And some of the pieces that we talked about earlier in this, if I'm doing a monitoring program and I see that suddenly this loan or borrower has dropped insurance, well, is that a precursor to there's going to be some additional collections issues that are going to come down the pipe because the next thing is going to be their car payment. If they have insurance, then I can file a claim potentially with the carrier for the damages to the vehicle so I can offset my deficiencies that may come about. So making sure that those three pieces all are working together, because if your recovery program is working efficiently and to whatever the standards are that are being imposed from a COVID-19 standpoint, your remarketing program is flowing from your recovery piece, and then your repossession claims piece, which really is tied to those two but doesn't impact them. You're not, by doing a recovery claim, you're not impacting your remarketing. It's not going to cause delays or holdups. You're still going to be able to move it through for a sale at the same time collecting some of these additional dollars. So, short answer is making sure that you're working with all three of those groups, or have a solid program that lets you work with all three to make sure you're following everything to optimize those programs.
Thank you, Jeff. What are some of the potential concerns of outsourcing your risk management services?
Well, I think some of the potential concerns are things you need to really be aware of when you do outsource any services, and I'm sure everybody on this call has thought about it, is you need to make sure that you're working with a vendor who's got your and your clients' needs at the forefront. You want full transparency in whatever the program is that you're using. You want to be able to see through a dashboard or a system to make sure that you know what's going on with claim activity or insurance activity, anything that they're touching with you. You want to make sure that they have the bandwidth to handle your volume. You want to make sure that they have followed through and are fully compliant, that their IT is compliant. You want to make sure that they have quality control programs and processes, and that they're going to let you see those programs and processes. And you want to make sure that you have a good rapport and working relationship with them. I mean, there's always a benefit of outsourcing it, and then you get into it and you find out, well, this isn't really what we thought it was going to be, or the people we're dealing with aren't the people that we thought we would be working with. But in these times, especially with what's going on, you need to ensure all of those different pieces are together to help you put off any concerns that you have. But I mean, really working with someone you can trust and work well with, the transparency piece, and then always the compliance piece is a major part of what you're doing.
Thanks, Jeff. The last question is, why do you think it's important for small to mid-sized institutions to expand their digital communication capabilities?
Sure. I think that's a good question, and I think we covered it probably earlier on, but digital communication is a key, especially now in COVID, and we were moving to that at the beginning of the year, that people now are willing to take and follow information on their mobile apps, text messages, emails, even not so much letters is really not the way to get things done anymore. Particularly if I'm emailing or texting someone, I'm going to get a response and a higher response rate than anything else, and that can be through as we talked about, reminders, status updates of their loan, the opportunity to make payments through their mobile devices, anything that makes it easier for the customer. And it also can help from an organization standpoint, that if before I had to have 10 people in a call center or a service center handling these issues and communications, I can now use an omni-channel approach and do it through an outside source that I've vetted and feel comfortable with. It's a better way to utilize the resources that you have at your hands.
Great. Thank you so much, Jeff and SWBC, for sharing your expertise with us. Remember, the slides and recording of today's webinar will be available in AFSA's Webinar Resource Center. Thank you so much, everyone. This concludes today's webinar.
Thank you, everyone. Thanks for coming.
Thanks, Jeff. Have a good one.